Bitcoin just crossed the critical threshold that has every institutional investor watching. 50 billion dollars, just 50 billion, that's how much money just flooded into Bitcoin options markets. And the story at number 7, it's the regulatory bombshell that nobody saw coming, and it's about to reshape the entire crypto landscape. The last 24 hours have been absolutely insane, and if you're not paying attention right now, you're already behind what's up, crypto fam. It's October 23rd, 2025, and the market is absolutely moving today. I've got 10 major stories that are shaking things up right now. Before we dive in, hit that subscribe button so you never miss these daily updates. We do this every single day. Let's roll. All right, let's talk about where the market stands right now. Bitcoin is currently trading at $108,970, up 1.6 in the last 24 hours. That's some solid recovery after 7 consecutive days of decline. The total crypto market cap is sitting at approximately $2.162 trillion, showing resilience despite recent turbulence. Bitcoin dominance remains strong as institutional money continues flowing, and Ethereum is at $3,845, posting a modest 1.1 gain today in the altcoin space. We're seeing some interesting action. Hyperliquid's Hype token is absolutely soaring on major news. We'll cover BNB and Sol are posting gains, while the broader altcoin market shows mixed signals. The big story: Bitcoin options open interest just hit a record $50 billion on Deribit, with traders actively hedging both upside and downside risks. Market sentiment is cautiously optimistic as regulatory clarity begins to emerge. Now let's break down what's driving these movements. Bitcoin options open interest just exploded to a record-breaking $50 billion on Deribit, and this is massive for understanding where the market's headed. What's fascinating here is the split traders are placing equally aggressive bets on both sides, bearish positions betting Bitcoin drops to blah. This tells us institutional players are actively hedging, expecting major volatility ahead. The sheer volume of capital, $50 billion, shows serious money is taking crypto seriously, whether you're bullish or bearish. This level of institutional engagement signals we're entering a new phase of market maturity. Remember, when everyone said institutional crypto adoption was years away, well, stablecoin issuers are now racing to secure federal bank charters and direct access to the Federal Reserve System. This isn't some small development. This is stablecoins trying to integrate directly into the traditional banking infrastructure. Major issuers are applying for trust charters specifically to tap into Fed services, which would give them legitimacy on par with traditional financial institutions if approved. This bridges the gap between crypto and traditional finance in a way we've never seen before. The implications for USDC, USDT, and other stable coins could be enormous. We're watching history unfold here. The U.S. crypto market structure bill is gaining serious bipartisan momentum, and Coinbase CEO Brian Armstrong is publicly expressing optimism about its passage. After years of regulatory limbo, lawmakers from both parties are finally finding common ground on comprehensive crypto legislation. This bill would establish clear rules for crypto exchanges, custody services, and token classifications. Basically, everything the industry has been begging for. The bipartisan support is the key here. It's not just one party pushing this through. If this passes, it removes the regulatory uncertainty that's been hanging over American crypto companies for years. Expect major price movements when this hits the floor. Bitcoin's 7-day losing streak finally broke today, but the journey to 118,770 wasn't easy for an entire week. Bitcoin faced consistent selling pressure, dropping from higher levels and testing investor resolve. The crypto market as a whole experienced this sustained decline, with Bitcoin trading around 108,544 earlier this morning before recovering. What caused the reversal? A combination of institutional buying options, market activity, and growing confidence in regulatory developments. The once gain today might seem modest, but breaking a 7-day losing streak often signals a trend. Reversal traders are watching closely to see if this is the bottom or just a temporary bounce. Hyperliquid's hype token is absolutely exploding today, and the reason is wild. A 1 billion purchase plan just got announced while Bitcoin and Ethereum posted modest hype is surging dramatically as news spreads about this massive institutional buy. Hyperliquid, a decentralized derivatives exchange, is seeing unprecedented attention as this $1 billion commitment signals serious confidence in the platform's future. This is exactly the type of story that creates FOMO in the altcoin market. When major capital commits to a specific project, retail follows. If you've been sleeping on DeFi derivatives platforms, this news might be your wake-up call. Keep hype on your radar. Quick pause if you're getting value from this breakdown. Hit subscribe and turn on notifications. We bring you these daily crypto updates so you're never caught off guard. All right, let's keep going. News number 7 is coming. Ethereum is targeting a move toward $8,000, and technical analysts are saying this setup favors a massive breakout, currently trading at 3,840 files. After a 1-1 gain today, ETH is showing signs that altcoin season might be returning. Historical patterns suggest that when Ethereum breaks certain resistance levels, it tends to rally aggressively, and we're approaching one of those levels right now. Some analysts are even calling for a move toward $5,000 first, then $8,000. If the pattern holds, Ethereum accumulation strategies are being deployed by major players with goals set at 5 of total ETH supply. This isn't speculation, this is data-driven analysis pointing to major upside potential. All right, here it is, news number 7, the story I promised would blow your mind. The U.S. government shutdown is stalling critical crypto regulation progress, creating massive uncertainty just when the industry needed clarity. This is now the second longest government shutdown in U.S. history, and it's directly impacting the crypto market structure bill we talked about earlier. Lawmakers and industry executives are clashing over DeFi regulations while everything sits in limbo. What makes this shocking? Just as institutional money floods in and bipartisan support builds, the entire regulatory framework gets frozen by political dysfunction. This could delay crypto's mainstream adoption by months or accelerate it if it forces compromise. After years of regulatory ambiguity, redefine institutional participation in digital assets, and we are at a strategic inflection point right now. Despite the shutdown complications, the broader regulatory picture is becoming clearer than ever before. Major financial institutions are positioning themselves for what they see as inevitable comprehensive U.S. crypto regulation that legitimizes the entire space. This isn't just about rules, it's about opening the floodgates for pension funds, hedge funds, and traditional banks to enter crypto with legal certainty. Early stage investors who position themselves before this regulatory clarity fully materializes could see massive returns. The window is closing fast. XRP is showing interesting price action today, though it's posting more modest gains compared to Bitcoin and Ethereum. Trading analysis for October, XRP is consolidating after recent volatility, with technical indicators suggesting a potential breakout is building. What's significant about XRP right now is its position in the regulatory conversation as one of the most scrutinized cryptocurrencies by the SEC. Any regulatory clarity directly impacts its price trajectory, with the market structure bill gaining momentum and regulatory frameworks emerging. XRP stands to benefit significantly if classification rules favor its model. Traders are watching key resistance levels closely, and a break above could trigger substantial upside movement. The broader crypto market is showing resilience despite 7 consecutive days of decline, and this tells us something important about where we are in the cycle. Market cap holding above $2.1 trillion, while Bitcoin maintains 108,000 plus levels, demonstrates strong support from institutional and retail investors alike. The combination of record options, interest, stablecoin banking integration, bipartisan regulatory progress, and institutional accumulation creates a foundation for the next major bull run. Yes, the government shutdown creates short-term uncertainty, but the long-term trajectory is clear. Crypto is becoming mainstream. Financial infrastructure position accordingly, because when this next wave hits, it's going to be historic. What an absolutely packed 24 hours in crypto. From that $50 billion options explosion to news number seven's regulatory shutdown bombshell, this market never sleeps. Bitcoin's sitting at $108,970 right now. And honestly, we're at a critical moment. Hit that subscribe button and turn on notifications. Tomorrow's news could be even bigger. Here's my question for you. Which story do you think will have the biggest long-term impact? The institutional money flowing in or the regulatory uncertainty? Drop your take in the comments below. Stay sharp, stay informed, and I'll catch you in tomorrow's breakdown.